Okay, recording this video. It is Sunday, 29th of March 2015. Recording this about 9 a.m. Hawaii time. It's about 2 p.m. Chicago time. And I wasn't going to particularly do a video this weekend because I've been busy, but something's kind of popped up and I just want to kind of talk through it. First of all, we had a great call this week. This kind of decline in the E-mini of 30 plus points that we hit on Wednesday was all set off by falling through supports on the 40,500 tip bar chart. So quick recap, we had a nice kind of bottoming activity, pull back to end of trend. This end of trend signal kind of quite high up, but it was kind of ending that last move. And then we had a complex correction on the way up, and this was Fed day, so we had the FOMC announcement, and that led to this kind of huge rally, which had a bunch of blue professional bars at the high. And then as soon as we tried to break above there and failed and came back into that Fed zone, bingo, this is where we dropped through supports. And if you go back to that video this week, it was just talking about how we had a confluence of supports, starting with the 4,500 tip bar chart, the 13,500 and 40,500. They all kind of came close together, and as soon as we dropped through that, we were in trending moves on those time frames. So the question is now, is that it for this decline? Potentially not. This kind of cyclical kind of pivot point back here is obviously kind of critical, this 2030 type level. We've initially bounced off it over the last couple of days and had a little bit of a shallow kind of pushback, but what we're going to have is a pullback to end of trend signal on this highest time frame tip bar chart. Similar to this kind of move, pullback end of trend. Once we go through an important support level here where we're breaking into a trend move, we finish this off with a pullback to end of trend sequence. It's like a last kind of cyclical kind of push down, and it's like kind of a fourth to fifth wave of an Elliott wave type pattern. If the third wave is the strongest wave here, this is kind of the pushback and the last kind of fifth wave. We have to put that in. Pullback to end of trend has to kind of run down. Plus, we've had, exhaustion sell on the left shoulder. Wednesday's activity was pretty extreme. The bullish divergence pattern that we put in is right on the zero line. And so when I see that, I say wait, because we'll have a bigger kind of number come out that gives us a flush signal after that. And a flush signal is pretty steep selling in this case, not quite as much as we had on this exhaustion sell, but it's getting close to those levels. So we're in due in the next day and a half, for a resistance level to come in on the 40,500 tip bar chart, and quite a lot of selling that'll give us a flush pattern that kind of comes down here. If you look at this bullish divergence pattern kind of on this turn, it's not really close to the zero line. It's kind of a ways for them zero line. So that's a better pattern in terms of bullish divergence kind of coming in and bottoming that market. But when you have them close to the zero line, expect something a little bit deeper that will give you a flush pattern. So the 40,500 tip bar chart still has to complete on the downside. Still got to put in pullback to end of trend. We've probably got to go put a flush pattern in. Now, if that kind of comes in, and if we have a little bit of a rally on Monday, and the pullback level kind of comes in here, the end of trend one could possibly be testing down into 30, kind of like this. But if we just kind of get going really first thing Sunday into Monday, something like that, and we just lose kind of confidence and the pullback level kind of prints around here, we could easily be testing these lows, and that's such an important low kind of down there that could trigger quite a lot of selling kind of going on. So, which actually is kind of my preferred, because in order to generate that flush pattern, we really need some kind of extreme selling. And I think we'll get that as we start to touch down to these levels, which are 30, 75. On the way down here, what did we get to? 33. So around that 30 level, so going from 50s down to 30 even, is going to be kind of critical. And then if we go through 30, then that'll bring in a lot of sellers, and all of a sudden that could generate that kind of flush pattern. So that's something to kind of consider. This has got to work itself out, pullback to end of trend. So that's the 40,500 tip bar chart. Now, those my kind of preferred analysis is on tip bars because of all the good stuff that comes with tip bars. You should know by that by now. I've been pointing to tip bar articles for a long time. So this is very similar to a 45-minute chart, and so I'm going to pull up the 45-minute chart, and again this is kind of the higher time frames that I look at: 45, 135-minute to up to a daily chart. And on this time frame, the 45-minute chart, it's got a very similar picture to the 40,500 tip bar chart. Here was this end of trend pattern that kind of kicked this thing off. Pull back to end of trend. We'd had exhaustion, sell, bullish divergence, not close to the zero lines. This is kind of a good one. We come in and we test that level down at 30, and we have this rally. Complex rally on the way back. There's Fed day. Kind of can't get through the highs. Come back into the zone. There was the breakdown level that we got into Tuesday into Wednesday, which led to this kind of big decline. And we got the same thing going on. We've got an exhaustion sell. We got bullish divergence right on the zero line, and we've still got to make our pullback to end of trend on the 45-minute chart. We've got to put that in at some point. Obviously, Friday's activity was incredibly light. I took one trade, took out 1 point, took another trade at break even, but it was so slow, said no, not going to trade Friday. And you can see all those amateur bars, kind of low activity bars on Friday. It's kind of a nothing day. You'd have thought, well, if people thought this was such a bargain down here at kind of 2030s, 2040s, they'd be pretty anxious to kind of buy it into that kind of low, but no, they were kind of uninterested. So Friday was not a particularly interesting day. So we've now got this cyclical turn. It's going to come up in the next couple of bars, and let's see, again, same pattern. Pullback to end of trend's got to go on. We've got to put in something like a flush pattern or something more extreme than what we've seen so far in terms of selling, and that could easily take us down through this 30 level. So it's worth considering. None of these are kind of projections. They're not like forecasts saying this is going to happen. Just keep your mind open. I keep my mind open. If it goes in the direction I'm kind of thinking it might go, then it could be kind of a biggish move. So take my signals kind of day by day, but these patterns do kind of turn out. What you want to see is the pullback to end of trend signals rippling through these time frames. So they come in on the 45-minute chart, and then you'll see one on the 135, and then you maybe see one on the daily chart, or an important support kind of comes in on the daily time frame. I mean, it's all these different, the lowest to the highest time frames you see rippling through. Pullback end of trend, pullback end of trend. Maybe you'll see one in this one. Maybe you just come into cyclical support and that kind of ends the move. But we haven't even seen pullback to end of trend on this 45-minute chart. So that's in due. We're in a trend move on the way down. We got him pullback to end of trend. Maybe we'll kind of bust back up and put him pullback to end of trend here. 2030, 2040 kind of holds, and that's the end of this move. But if we start to advance down and start pushing towards 40, 30's in play. That pullback to end of trend could end up being quite nasty, kind of on the downside. So bear those two things in mind. Now, with that being said, then this weekend the stock market crash warning indicator went off, which is just, well, coincidence? Who knows? I'll reference this kind of indicators free code on the site, and it's quite a lot of work gone into the feature article on this. I updated it yesterday after this signal kind of went off. So this is just a weird anomaly. Years ago when I was looking at commitment of traders data, I've said this before, I was kind of enamored with commitment of traders data, partly influenced by kind of Larry Williams, and for years and years I used to do kind of updates on the weekly numbers on commitment of traders. But kind of fell out of love with it. There's a couple of things I do like about it. I do like the divergence patterns that kind of pop up on commitment of traders, kind of on swing trading or kind of longer term charts. They're pretty useful. And then this crash warning indicator signal came out of that analysis. Again, on that feature article, you can see the setup for it. It's a really simple setup in terms of commitment of traders. The one kind of caveat that I say kind of going into this kind of lately is I use the SP, the large contract for 500 S&P 500 futures in order to kind of calculate this. Again, I'll reference the information on commitment of traders data. The Emini has become a almost pure day trading vehicle. There's very little directional information comes out of commitment of traders on the E-mini. It just wings around so much. There's no kind of day-to-day. No one's really holding longer term positions on the E-mini. The E-mini is almost a pure day trading vehicle. However, the large SP contract, which is 5 times the size, became the default longer term kind of trading contract, but it's traded less and less and less over the last several years. Kind of all the money's moved into maybe the SPY as a way of trading kind of longer term positions, or a lot of that money's kind of shifted to E-mini kind of shorter term trading. So maybe the signals are a little less robust because there's just lesser volume kind of going through the SP contract. But we have had a signal. This kind of popped up. We broached new 52-week highs. We kind of had little kind of backwards and forwards pattern that I like on the commitment of traders to kind of trigger this warning signal. Now, you can go back on the feature article, look at all the stats on this warning indicator. It's got a 10 out of 10 for identifying, in the last 25 years, since 1990, every single correction and crash has been signaled by this indicator. Yes, there have been false signals, 5 or 6 kind of false signals over that time period, but it's gone for every single one. Now, history in the last couple of years, we had this triple kind of in 2013 to 2014, warning, warning, warning came up. Nothing came of any of those signals, those 3 signals. So they end up kind of being duds. Bit of a shame. But it was an extremely strong rally. We had Fed intervention, we had quantitative easing. Maybe the signals were kind of corrupted by that. Who knows? Anyway, they were poor signals. But last year, 2014, we had a nice little warning signal kind of popped up in the end of September, and we got this little correction. Now, the move down here was actually 9.9% on the S&P 500. So I've adjusted this little warning indicator just to show a correction there. Typically, the technical definition of a correction is 10% move from the highs down. So we hit 9.9. Well, that's pretty damn close. So I'm going to call that in terms of good signal. So warning to correction there. And then with this weekend's activity, this is what the commitment of traders numbers have done. Kind of flipped over, and that's given us this warning signal. So just keep it in the back of your mind. You can see some of these warning signals. We get some false signals, get some good ones that lead to crash, warning, crash, corrections, and so on. Again, reference the feature article on this. The code is free, so you can have a look at that and see what's kind of going on there. It's very simple, but it did signal this weekend, so that's kind of important. And then we're also coming up to tax time, and it's the first kind of proper seasonal trade of the year after the Christmas, the Santa Claus rally. And so we got that to factor into the position as well. So this is how the seasonal signals kind of go off on the tax time signal. This bar here, this cyan bar, that's exactly a year ago. So we're looking for this V pattern. Coming into that sell-off and rally that we have at tax time, we seem to have a little bit of strength, and then a sell-off into the 15th, and then a rally back. And again, I'll reference the seasonal feature article on this, and it just talks about that. Maybe the professionals kind of keeping prices strong, kind of going into their profit taking. That might account for this little bit of a move back up. Frankly, I'm not kind of concerned about. This is the dip. This is the U-turn that you're really interested in. It's the sell-off leading into the 15th, and then it's the rally out of the 15th. So as money kind of takes profits in order to pay taxes and then gets reinvested in kind of tax-effective kind of instruments afterwards, this V pattern here. So potentially we've got some strength, maybe, if it kind of sticks with this seasonal pattern, and then this kind of sell-off here. So this has got a few days to run until this really starts to kind of play down. At the end of this week, we've got Easter, Friday, markets are shut. So it's kind of interesting kind of going on there. Maybe if we get a little bit of a break over the next kind of couple of days, maybe people will be scared and say, whoops, I need to take profits because I should have been taking profits up here. after the FOMC day, and the market's kind of sold off a little bit, and so I'll be anxious to sell out. So potentially, that kind of tax time selling that goes into that end of the tax year, could exacerbate this, kind of contribute to it kind of selling off. Anyway, it's interesting that that's kind of popped up at the same time. How this kind of plays out, exactly day by day, I do not know. Nobody knows. But I am looking for a pullback to end of trend on the 45-minute chart. And however that plays out, whether it busts through 2030, this is not over on the downside until, in my mind, we put in that pullback to end of trend. So how that plays out is going to be absolutely critical over the next, 24, 48 hours. So there we go. It's kind of back in my usual kind of bearish mode. Longer term, I think this correction, it could be a decent correction that the the pros might be looking forward to getting into. So whether we go down, a 10% move from these highs takes us down to 1900. So let's look at that on this chart here. 1900 kind of takes us down here. It takes out this low, and it takes out these lows here as well. So it's kind of an area where potentially pros have been saying this rally's been really strong, but longer term I see it still continuing for a good part of the year. We've got strength in the US dollar. We've got nothing that we want to buy, and kind of around the world. If I'm buying stuff around the world, if I'm thinking about the big markets, kind of Japan, Europe. I'm worried about the currency kind of continuing down. So, if people are looking for big opportunities to move big money into the equities market in the US, a decent kind of correction down to 1900 would be a great kind of buying opportunity for them, maybe. So let's see. Again, let's play it kind of day by day. See how this kind of plays out, this pattern over the next 48 hours, and then just bear in mind that we got the crash warning indicator has gone off. These ones were bad, false kind of signals. This one was pretty good, and we've got seasonality kind of playing into the pattern over the next 10 days or so. So there we go. Hope you're enjoying your weekend.